For ages, gold has served as a status symbol for everything opulent, from jewelry to sports cars to high-end restaurants. In our current market, it's one of the most popular and significant products. Welcome to the Financial Flow. Please like and subscribe to our channel and turn on notifications to stay up on our latest videos. Suki Cooper, the Executive Director of Precious Metals Research at the Standard Chartered Bank, said, "Gold is unique in that it's both a commodity and a currency, so some investors will hold it purely as financial assets, and others may hold it in jewelry form. So it can be enjoyed, but also it's a way of storing wealth as well." Jason Snipe, the Chief Investment Officer of Odyssey Capital Advisors, added, "It's really fascinating asset. It's been around for a long time, which just shows the power of what it's been and how it's played into the market. The trade volume is $183 billion on a daily basis on average. Gold is one of the world's most valuable valuables, and its value has risen dramatically over the past few years. Inflation adjusted, gold was only $460 per ounce at the start of the year 2000. It has been increased to almost $1,815 per ounce by the end of August 2021. The dollar value of gold has grown over the last decade, as can be shown. However, not everyone is enamored with gold as an investment. Warren Buffett has voiced his reservations several times, calling it an asset with no use. Ben Laidler, the global market strategist of eToro, said, "One of the key characteristics is it has income attached to it. It pays no income. It doesn't pay a dividend like stocks, and it doesn't have a coupon like bonds do. But I think that's gonna become more of an issue going forward." Is gold an attractive investment? As a valuable metal, gold is attractive to investors because of its rich history, its durability, and the fact that it is so rare. Since it is used in so many products in the world, gold is in more demand than other precious metals. It's really flexible and easy to work with. The demand for gold is also influenced by central banks and financial entities. More than 35,000 metric tons of gold will be held by central banks in 2021, roughly one-fifth of all gold ever mined. An estimated $158.5 billion worth of gold is kept by the International Monetary Fund. A very large portion of central bank reserves had to be held in gold. So we've seen over the past couple of years, and central bank buying has picked up, and in fact in 2018, we saw buying in excess of 650 tons, so that appetite to buy gold continues to persist. Yes, we've had periods where we saw central banks reducing their gold holdings, but broadly, we've now seen central bank holdings reach their highest level since 1999. Gold is a popular risk diversification asset because of the metal's long track record of holding its value. We can see that the inflation-adjusted value of gold. Looking at the real price of gold today, we can see that it's pretty close to the levels that it hit back in 2011. We can see that gold has pretty much held its value through decades. The capacity of gold to protect investors from market volatility has made it a favorite investment strategy throughout history. The dollar had a gold inverse relationship. So as the value of the dollar, the base, pulls back oftentimes, gold moves in the direction, so it moves positively, in situations like that, because it's not as susceptible to inflation. It doesn't lose its value like other assets do, and that's generally from a macro perspective why investors invest in gold. The same holds true for deflation. Gold is the most sought after commodity in times of economic or financial distress. Inflation-adjusted gold prices rose from approximately $1,150 per ounce in 2008 to about $1,970 per ounce in 2012, following the Great Recession. As a result of the pandemic-induced 2020 recession, gold prices rose to record highs, reaching $2,021 per ounce overnight. It's because gold is proving its value and being a liquid asset used to meet margin calls elsewhere, and then still be able to retain its value. However, experts disagree on whether gold is a good hedging option. Widely discussed and argued whether gold is the greatest inflationary hedge, and I would argue it's probably not. I think equities are, but I do think it plays a role. Gold's relationship to inflation has been found to be weaker in more recent studies. At instances of high inflation, investors have been seeing a mixed bag of results, suggesting that holding gold to hedge may be more of a risk than a safe bet. So we have had periods over the past 5 years where gold safe haven role has been questioned whether it still has a role in a portfolio. Well, gold investors may have suffered a significant loss between 1973 and 1979. when inflation was over 6.5% per year, and another 7.6% between 1988 and 1991, when inflation was around 4.6% per year. Gold is not necessarily a perfect hedge against inflation, but it can be a strategic hedge against inflation. Gold is held for a period of time before inflation picks up, so various studies have shown us that if gold is helpful 12 to 18 months before inflation takes higher, and then it's held for an additional 12 to 18 months while inflation moves higher, it can be a good inflation hedge. But if it's just bought for a short period, let's say a month, it may not prove to be an effective inflation hedge. Gold's long-term returns are likewise inferior to those of stocks and bonds. My concern with gold and commodities like this is more about the long-term yield. So you had these macro events, these exogenous events, like we just dealt with last year with COVID. Geopolitical issues, I think, generally as we move into a different cycle goal, is not as great a performance as we move into a normalized environment. One of Warren Buffett's most well-known stances is that gold is an unproductive asset that does not pay dividends or interest. Berkshire Hathaway's 13F filing disclosed that Buffett had completely abandoned its gold position by the end of 2020, reinforcing his investment philosophy on the precious metal. In August 2020, Buffett made news by purchasing $562 million worth of shares in a gold mining company. Jason Snipe said, "It's prudent portfolio management to have maybe a small allocation, but this is not an asset that you want to be heavily entrenched into if you're looking for a long-term deal." So I would agree with Warren 100%, from an investor perspective. Silver and Bitcoin have both grown in popularity in recent years, and are now competing with gold for the rank of the most valuable commodity in the world. Whether these commodities can actually unseat gold remains to be seen. If you're perhaps looking for exposure to a commodity that gives you some of the macro exposure, but also a great commodity exposure when it comes to industrial usages, investors may prefer silver. But if you're looking for a commodity for an investment that is more exposed to the macro environment, then investors tend to turn to gold instead. Jason Snipe said, "I think now there's a lot of conversation about, digital assets being deemed as store value, whereas gold has always been deemed as store value. I think that will change over time, so to be honest with you, I do not see it as competition in the long run. I think both asset classes can play in this market, and that's what makes the market. So it's very kind of exciting to see how they both develop alongside each other. As long as history is any guide, gold's power over the world will not diminish anytime soon." Ben later said, "I think you need to be aware that these bull markets don't last forever, and the longer they go on, the more you just need something to be looking at these. Again, these sort of rainy day assets, like gold, I think you always want to be holding them. The question is, just sort of how much?" Suki Cooper said, "Certainly, compared to the prices that we've seen over the past 5 to 10 years, and we think gold prices will remain elevated. And there we might see another move higher, and gold prices. But we think in the near term, there's more upside risk, and then towards the end of the next year, we're likely to see gold prices starting to trend lower." Thanks for watching. Don't forget to leave a like and subscribe to our channel for more content like this. Have a good one.